Hi, I'm Luke Lango, and this is Investor Place Quick Picks, where we communicate to you some of the market's best investment ideas in just 10 minutes.
America's leading innovation investor, Luke Lango's Investor Place Quick Picks.
Today, we're going to talk about one of my favorite long-term investments that has been absolutely crushed recently, and which I think presently represents maybe the best investment opportunity in the market. The company, Canoo, ticker GOEV. Now, Canoo is an electric vehicle maker. As many of you may recall, I have long loved this company for its signature and breakthrough multi-purpose platform, or MPP technology, that features the world's first steer-by-wire system, and which is uniquely designed to remove all wasted space from a car. I felt this platform represents the future design foundation of both consumer and commercial cars in the era of self-driving, where cars are meant to be ridden in, not driven. However, one look at the stock price shows you that this bull thesis has not panned out so far. Canoo's stock actually tanked this past week after the company announced some pretty big and clearly shocking changes on its first ever conference call as a public company. But this is not a 3-month story. It's a 10-year story. And the changes announced last week do not change anything about the 10-year economic value of Canoo's MPP technology. That's why I think this big drop is an opportunity. Below $10, Canoo stock actually presents maybe the best investment opportunity I've seen in a year. Here's why. You see, Wall Street is like your friend who always has a game plan for everything. As soon as the game plan changes, that friend freaks out, right? Well, same thing on Wall Street. As soon as businesses change their game plans, Wall Street freaks out too. Canoo just changed almost everything about its business game plan in its conference call, and Wall Street is expectedly freaking out. Specifically, before the call, the story at Canoo was as follows. Canoo has assembled a world-class engineering team to build a breakthrough multi-purpose platform technology that, through some cool tricks, eliminates all wasted space from a vehicle. This platform, therefore, enables the construction of uniquely designed cars, vans, and trucks that maximize interior space, which, as you would expect, is especially important for families with lots of kids, mobility professionals who transport stuff all the time in the hood of their trucks, and delivery companies who are looking to maximize how much each one of its cars can transport at any given time. All of that, everything I just said, remains true today. Nothing about the core technology, the engineering team, or the big vision changed in the conference call. What did change, however, was how Canoo plans to monetize its breakthrough MPP technology. You see, originally, the company was going to provide engineering services to other automakers so that they could build cool new EVs on top of Canoo's MPP technology. Those services would provide enough revenues to Canoo to subsidize the company until it could scale its own manufacturing operations and sell its own proprietary electric vehicles. And they would sell those vehicles via a subscription model to consumers. But on the conference call, Canoo's executive chairman announced that the company would basically be scrapping all of that. They would be scrapping the entire engineering service business in order to protect the company's intellectual property or IP. And the company is no longer planning to rely heavy on a subscription business model to sell cars, since doing so would put a lot of pressure and risk on the balance sheet. Those are some pretty big changes, and naturally they scared Wall Street. After all of the company's 2021 revenues and most of its 2022 revenues were projected to come from the now defunct engineering services business. Concurrently, most revenues in the company's original financial model, which went out to 2026 and became available when the company did its SPAC merger, all of those revenues were from the company's subscription-style sales model, which no longer exists. So needless to say, that model that we had back when the company did its merger is now useless. And that leaves investors and analysts on their own to figure out just how big the company can get with this new business model over the next few years. Now, to make matters worse, the CFO is now also skipping town, just months after the company went public. That's certainly a lot of uncertainty, and all of that uncertainty is what's causing the enormous sell-off in Canoo stock. Oftentimes, I find that uncertainty on Wall Street creates golden opportunities for investors. This is one of those situations. Remember, all of the value of Canoo rests on the company's world-class engineering team and the signature MPP technology they have collectively developed. None of the changes announced on the conference call, the changes I just walked you through, impact that value. Indeed, one could actually argue that they augment that value in a multi-year time horizon. You see, switching away from working with other automakers protects the IP of Canoo's breakthrough MPP technology, since in such engineering service agreements, Canoo provided partners with access to the MPP technology and helped them build zero wasted space cars on top of that platform. Now though, Canoo will be the only company making zero wasted space cars with this signature MPP tech. That both widens Canoo's technological moat and should also boost the company's sales volumes long term, since it will reduce the number of technologically similar competitors in the market. Now, when it comes to making zero wasted space vehicles, Canoo will truly be in a class of its own. Meanwhile, pivoting away from the subscription business model will reduce balance sheet risks and also allow the company to focus more heavily on the commercial market, vans and pickup trucks. That's important because demand for subscription models in those commercial markets not that appealing. And that's also where Canoo's MPP technology shines brightest, right? Because again, mobility professionals, their pickup trucks, they want to maximize space. Delivery drivers, they want to maximize space. Logistics companies maximize space. That's where the MPP tech shines brightest. And the subscription model, not necessary there. So long term, this pivot really should result in materially higher commercial segment sales and only marginally lower consumer segment sales for an overall boost to long-term revenue potential. So, in a nutshell, Wall Street is freaking out with Canoo stock right now because investors hate change, of course. But Wall Street doesn't fully acknowledge the scope of these changes and how they actually positively impact Canoo's long-term potential. Wall Street's confusion is your opportunity. In my opinion, here's what really happened at Canoo. You have this world-class engineering team. they developed this breakthrough MPP technology. They then got a bunch of not world-class finance and strategy folks to put together a game plan to monetize that breakthrough tech. That game plan was half-baked and risked the it was half-baked and it risked the company's IP via open sharing engineering service agreements with competitors. It also put stress on the balance sheet via subscription sales that they had to report and carry on the balance sheet. So when some more experienced business people came into Canoo, right after the SPAC merger, right during the SPAC merger, they looked at that half-baked game plan and said, this ain't it. This just ain't it. This is not gonna get it done. So those people convinced the board to make some big changes to the strategy side of the business. Right now, they're making those big changes. And at the end of the day, although these changes are rough to stomach right now, at the end of the day, I think Canoo will emerge from these changes as a company with both a great technology and a great game plan to monetize that technology. Long term then, I feel the changes that Canoo is making today actually position the company for bigger and more durable growth. I'm doubling down on my long-term bull thesis on Canoo stock. I continue to see this company as leveraging its signature zero wasted space MPP technology to create a new class of uniquely designed family cars, pickup trucks, and delivery vans that will see very healthy adoption in both the consumer and commercial end markets over the next several years. By 2030, I maintain projections that Canoo will control around 1% of the consumer vehicle market, around 5% of the commercial vehicle market for $10+ billion in revenues, and have EBITDA margins of about 15%, comprised of a low 20s gross margin profile and a high single-digit OPEX rate. On those assumptions, I continue to believe that Canoo stock is worth close to $50 today, meaning that right now, below $10, the stock is an absolute steal. Well, that's all we have for this edition of Investor Place Quick Picks. I hope you like what you saw. If you did, please subscribe, hit that notification bell, smash the like button, or give me a follow on Twitter, where I love to communicate with readers, watchers, anybody that wants to talk about stocks. I'm there to talk. Until next time, cheers and happy investing to all.